So my name is Kevin Hennessy. I'm the Chief Executive Officer here at Brabo Payroll. I'm joined by Adam Mathis of ES Cost Recovery, who's been a fantastic partner of ours, focusing mostly on employee retention credit, R&D credit, work opportunity tax credits, 179D, cost segregation study, amongst many other things. They partner mostly with CPA firms to help run studies to maximize tax credits. And then they provide administrative support to all the firms that they work with in the event of an audit or anything else. Today, we're going to be talking about the employee retention credit specifically. We're going to give you guys an overview of the program itself, some of the changes that have taken place with the most recent legislation update, and see if you have an opportunity to claim this credit for your business. We currently have 92 people in attendance. For those of you that have never been to one of our webinars, I just ask that any questions that you have, you post them in the Q&A section, not the chat section. We won't be monitoring the chat as much as we will be the Q&A. So if you have a question that you are hoping to get answered, then please put them in the Q&A section. There is not any handouts or slides for this session to pass out at this time. And then Carla is asking if there will be a replay. There will be a replay that we'll be sending out to all of our customers. If you at any point want more information about working with EF Cost Recovery or taking a deeper dive on this program for your business, you can request a consultation at the end of this. You can simply reply to the email that we sent you regarding your registration. So without further ado, we're going to hop into it. I can see that we're still having more participants come in. Again, if you have any questions, put them in the Q&A. We'll get to as many as we can at the end of this meeting. All right. Adam, please introduce yourself and take us through the first slide.
Thanks, Kevin. Hi, everybody. My name is Adam Mathis. As Kevin said, I'm with EF Cost Recovery. We're a niche cost recovery consulting firm based out of southeastern Massachusetts. We've been in business about 10 years. As Kevin alluded to, we do a number of things, predominantly research and development tax credits and the work opportunity tax credit. And then as things pop up where we have clients that come to us and ask for our assistance, where we believe we can add value, such as the employee retention credit, we'll put together a program and offer it out to the masses. And we're lucky enough to partner with Kevin and his team at Brabo, and he's brought us in here today. So as far as what is the employee retention credit? It was put in place back in March as part of the CARES Act, but it was really like the forgotten little brother, because at the time you could not use the employee retention credit if you had received a PPP loan. So the vast majority of business owners took advantage of the PPP and hence were locked out of the employee retention credit. Well, that changed at the end of December when the CAA was signed, and they made it retroactive so that you could use the ERC in conjunction with the PPP. So what is it? It's a fully refundable payroll tax credit that was put in place to incentivize employers to keep employees on payroll, and it's obtained through your 941 tax filing. So it's like I said, it's fully refundable. It's a really powerful tool. It can mean tens of thousands, in some cases hundreds of thousands of dollars for businesses.
So that first go around, when they did it in 2020, as Adam said, you could only use one program or the other, whether it was PPP or the employee retention credit. It was a maximum of $5,000 per employee, and that was a credit of 50% of wages up to $10,000 on the entire year. So that program, I think, kicked off on March 12th, if I'm not mistaken. So one of the things that's important to consider, and I'm not sure if we have it on a later slide, is really how this plan now has to work hand in hand with the PPP. You cannot have what's called a duplication of benefits, which means that you can't use the employee retention credit for funds that were forgiven or paid by the PPP or the EIDL. So you want to make sure that you're not being redundant in those two areas. And another thing for any of you businesses that did get the grant through the state of Massachusetts, one of the agreements that you signed in getting that grant was that this would not be a duplication of benefits for something covered by anything else. So I will take us to the next slide. Who's eligible for the ERC, Adam?
So in order to be, anyone is eligible, Kevin. So that unlike the PPP where, you know, if you had over 500 employees, you were not eligible, there is no cap when it comes to the employee retention credit. So businesses of all sizes are eligible. There are two different criteria that we have to look at in order to determine eligibility, which I think we'll get to at some point here in these slides. But the fact of the matter is that everyone can take advantage of this. There's no limitation based on the amount of employees. There are some caveats in the law that, you know, we have to look at once you're above certain thresholds of employees and what wages can be included, which we'll touch on. But the answer is everybody is eligible.
All right, so I'll take us to the next slide. All right, so CARES Act 2020 versus the CARES Act 2021. The CARES Act of 2020, employers are eligible only if the operations were fully or partially suspended as a result of a government order. So for those of you in Massachusetts, a lot of you were impacted in that way, depending like state by state on restrictions, whether it was curfews or other means of restricting business. That's something that you would want to look at. You had to experience, or the key word here is or. So operations were fully or partially suspended, huge capitals, or you experienced a 50% reduction in quarterly receipts compared to the same quarter in 2019. While many people will see a 50% reduction in the second quarter of last year, we know that many people were impacted by some type of a government shutdown. So being able to look at both of those cases, and this again is for the 2020 version of this program. If less than 100 full-time employees, the tax credit is for wages paid to all employees. If it's more than 100 full-time employees, the tax credit is for wages paid to employees who are being paid and not working. And again, you really want to work with an expert team who's going to run a study on your specific case. Adam, can you tell us about some of the enhancements that were made to the Consolidated Appropriations Act in 2021?
Absolutely. So obviously the biggest enhancement, which was the real game changer, was that you could now use the employee retention credit in conjunction with the PPP loan, obviously without double dipping on wages. But in addition to that, going forward now in 2021, they've made it more accessible. So you still have, it's still an either or qualification criteria. So either your business was fully or partially suspended as a result of a government order that was restricting commerce, or now it's, instead of a 50% reduction, it's a 20% reduction in quarterly receipts compared to the same quarter in 2019. And on top of that, they've also built in a safe harbor quarter, Kevin, where if the quarter you're in, say, you know, first quarter 2021 doesn't fall 20% below first quarter 2019, we're allowed to look at a safe harbor quarter, which would be fourth quarter 20 versus fourth quarter 19 to determine eligibility that way as well. And then in addition to that, they've increased that threshold on full-time employees from 100 up to 500. Okay, so
it's important to know though, Adam, right? Like these things are still staying in place based on the different years. So you have to look at each year. 2020 has to be looked at in one way, and then 2021 has to be looked at in a different way. Even though those rules, like, because I think when it comes to the PPP, I think some of the new enhancements that were made to the PPP can apply to older forgiveness. I think that when we look at these programs, these are really two separate ERCs. Am I right?
You are 100% correct. The only part of the new legislation that was retroactive was that you could use both the ERC and the PPP. All of the other changes were on a go-forward basis.
And can I ask a question? I think I know the answer to, but when does it end for somebody? It's kind of like once you hit this qualifying event, now you're eligible for the ERC. That comes to a conclusion at some point. I think if it's in 2021, it's when your gross receipts, when there is not a partial shutdown and your gross receipts get over 80% of what they were. Is that how it works, or?
When it ends, it's different for the two different criteria. If we're qualifying, if you didn't meet the reduction in receipts test, and we're able to qualify you as being fully or partially suspended, when that full or partial suspension ends is when your eligibility ends. On the flip side, if you meet the criteria for the reduction in receipts, so say your second quarter 2020 was more than 50% down from second quarter 2019, you'll continue to be eligible for each subsequent quarter until your receipts exceed 80% year over year, which is what you were alluding to there, Kevin. And one other thing I'd point out on this slide is when we reference full-time employees, that is a true full-time employee, not a full-time equivalent, which is a key designation, very, very different. So there's a calculation that, yeah.
So for any of you that are applicable large employers, traditionally the way that they get the FTE counts is that they're adding up all the hours for the month and then dividing it by, I think 30 to get an idea as to how many full-time equivalents you have. This is a toggle switch. Is a person a full-time employee, yes or no? So, and then that list is kind of what's going to predicate how many full-time employees you have as opposed to an hours test. But I think, again, one of the points that I really want to drive home is there's a million moving parts with this program, and each person is going to have a different situation that they're going to want to look at. You'll be able to do this on your own. One of the questions that have come in, I'm going to answer it live right now. I apologize. Sorry. Can a business apply for an employee retention credit retroactively for 2020? We'll be able to go back up to what, 2 or 3 years, Adam? Like down the road. So if you didn't do it right now, you could eventually do it. But the short answer is we certainly can retroactively do it for our clients. When you work with EF Cost Recovery, they'll get you guys a study and they'll give us a report of the credits that need to be claimed, and then we'll do an amendment for fourth quarter. And we could certainly retroactively claim that credit as long as you qualified.
Yes, that's correct. So there's a 3-year statute on all tax-related matters. So we have, at this point, 2.5 years if we're amending the second quarter, but 3 years on most other things to go back and amend 941s and get you your applicable refunds.
Very good. So those are the two different programs. If anybody has any questions, please put them in the Q&A section, and we'll do our best to get to it. We're coming up on about 20 questions almost. All right, let me get my annotations off. Clear. All right. How do you calculate the employee count? To calculate whether the company has over or under 100 or 500 full-time employees, determine the number of employees by month. Nope, incorrect. So I think this is the wrong slide. Yep,
nope,
Adam.
That's accurate.
Did I do this wrong?
Yep, that's accurate. So to determine the amount of full-time employees you have, we have to look at it on a month-by-month basis for 2019 and then average out to 12 months. So what we're looking at is how many employees you had in your organization meet the full-time employee criteria in each month, and then we average out those 12 months.
And they are certifying that it's 30 hours is full-time? Is that?
It's in excess of 130 hours for the month, which I believe is about 32 hours.
But it's not a pool of all employees' hours. It's only employees that are over that count.
Correct. Okay,
so you have to really drill into the data on the payroll reports there to find that out. Any other thoughts on this, Adam?
Nope. It's pretty straightforward. It's something that's done as part of our service, Kev.
I apologize for that. I saw the 30 hours. I'm like, that looks like the applicable large employer, and I was wrong. So how much can you get from the ERC?
So it's again, we have to look at it two different ways. So in the original CARES Act, the credit maxed out at $5,000 per employee, Kevin. Now, as we move forward in 2021, that was changed dramatically. It's now a maximum credit of $7,000 per employee per quarter. Obviously, there are a lot of variables that come into play when we're calculating these things, which is probably on one of the next slides. But that is what's on the table. So, I mean, if you have 10 employees, if you had 10 employees on the payroll in 2020 and you're eligible, you can get up to $50,000, which is fully refundable. Now, when you flip forward to 2021, if you still maintained those 10 employees, you could be looking at $70,000 per quarter. So you're looking at a total available credit of $140,000 if you qualify for both the first and second quarter in 2021.
And that's when you and I are gonna get in the weeds with these folks for a little bit and give them some of the conversations that we've had in private. But one thing that I like to look at is, for example, this program started on March 12th. Many of you guys did not see PPP funding until about like April 10th at a minimum. So even looking at March 12th to when you got your PPP, that's a window. And then from 24 weeks from when you got it at a maximum, most people's PPP was ending in October. So all wages from October to December is something that you would want to look at. There's a lot of variables. And if you haven't done your PPP forgiveness yet, that's great news. We'll talk a little bit more about that. Limitations of the ERC, Adam.
So as we've alluded to throughout, you cannot double dip in this program. So the biggest thing is balancing PPP forgiveness and which wages and expenses you're going to include in that if you have not already submitted, and making sure that, you're not just dumping, all wages in your 24-week covered period just because, you have the wages there. You just want to make sure that, we want to make sure that you maintain 100% PPP forgiveness, but that we're also helping you maximize your employee retention credit, which is, it's a fine line to walk. And on top of that, there's also, you have to back out if you participate in the work opportunity tax credit, you can't double dip wages there. If you've taken any of the EFMLA or EPSLA payroll credits, you can't double dip on those as well. So
let me just touch on that, Adam. Yeah. So these are really for the Families First Coronavirus Response Act, right? So
yeah.
When you put employees down for COVID leave and you got reimbursed, those wages are not eligible. That would be considered a double dip. So when you're running a report and you're doing a study, you have to break back off of FFCRA wages because it's not something that can be included in the study. So that's really big. And then the PPP, one thing that we've seen a lot of, we've helped a lot of people to try to look at their PPP and everything else. A lot of people just did their forgiveness and they said, you know what, because now I was spending money and I was planning on running out of it in 8 weeks, but I didn't. And I was going to use a 75-25 split between payroll and other allowed expenses like rent or utilities, cloud computing, increased accounting costs, et cetera. When they're doing that forgiveness, they're like, you know what, I just had enough payroll, so I'm just going to send them just the payroll reports to make it nice and easy. But if you do that, you're limiting the number of weeks and the amount of wages that you could be claiming the employee retention credit on. So it's crucial that if you haven't yet done your PPP forgiveness, you take that into account. Even something as simple as planning, are you going to use your standard covered period, which starts on the date you received your PPP loan? Or are you going to go ahead and use the alternate covered period, which could start up to 13 days after you got the loan, because you're able to begin your forgiveness period after a certain amount of time. So that's almost something to also consider for your second round of PPP. This new program for the employee retention credit is only through second quarter. So for most of you, if you get your PPP second round, it's over. You can't claim going forward. So the further you can push that out, the more weeks you're going to be able to fit in. Now that puts you in the CEO, CFO conundrum of the longer you wait, the less likely you will be to have available funds of the PPP, right? So it's like one of those things, but you do want to make educated decisions as much as possible during this challenging time to coordinate these programs for the maximum result for your business. 100%,
Kevin, you hit the nail on the head. There is there are many, many moving parts in this, and you want to make sure that you are taking full advantage of all programs that you are eligible for.
All right. So an example of ERC, 10 location restaurant. Adam, can you give us the scenario here?
Yeah, so this is a quick serve restaurant franchise group. They had 10 locations when we first talked to them. We have way over 100 employees. But then when we go through, we do the calculation on their behalf. It turns out they have 210 employees, but only 45 of them are full-time. So we're able to go after all wages paid for every quarter because, let's be frank, the restaurant and hospitality space has been decimated during COVID. So they've either met the gross receipts test or they are all subjected to a full or partial shutdown. So we look at it and we went through and these numbers are staggering, really. They got a PPP loan of $887,000. When all is said and done, their ERC is going to approach, almost $650,000, which is real dollars, and it's significant. It makes a difference between life or death for some business owners.
Yeah, and I can see that their loan forgiveness was reduced. And my assumption is because they didn't meet some of the standards, like getting enough people to return to work or if they reduced wages. So for whatever reason, their loan forgiveness was reduced. So that I think may have given more of an opportunity to include more payroll in order to collect that employee retention credit. So partnering these two programs together is crucial to maximize what you're going to keep. It really looks good if they got all that forgiven, that would be great. But they ended up getting this. And, at the end of the day, the ERC, if they had only done that, this as a standalone actually would have been a better option than the PPP. But with the new rules where they could do both, they're going to be walking away with, what's my math here, $700K? Between these two programs, $700,000.
Yeah.
So, that's a huge opportunity for a 210 employee company, which I don't think is all that big. And for any of you guys that have 10, 15, 20 employees, this is something certainly worth looking at, especially if you're paying their wages before you got your PPP funding and after the forgiveness window was over, which is everybody on this call, I would think.
Yeah. Almost all businesses had some sort of qualifying activity there in that first month to 2 months where, let's be honest, nobody just flipped a switch, Kevin, and went from working in the office to everybody being remote and having no interruptions or being affected, more than normally, which is what the law reads. There was a transition period. Yeah, have we all kind of adapted and figured it out at this point? I think so. But in that first, month between March 13th and when you actually received your PPP funds, there's a lot of eligible expenses in there that we can go after that you're entitled to no matter what space your business is in.
So just with the respect to time, I wanted to make sure that we got through this relatively quickly. My goal is to get through the meat and potatoes of the presentation within a half an hour. We're at 26 minutes or so. So I wanted to talk a little bit about how you can work with Brabo and EF cost recovery. So anybody that wants for Brabo to get the credits for you, what we need from you is to give us a report of the employees and how much of a credit you're claiming on which year. We internally at Brabo cannot run these studies. There's too many moving parts. We cannot take a close enough look at every single customer situation. So we need for the customer to provide us a list of employees that they're claiming the credit for, how much money, and then we'll be able to do that amendment. So we can actually, and we would just charge to go back and do an amendment for fourth quarter of 2020. Going forward, you can provide us the employees and the wages that you want us to claim. If you work with both Brabo and EF cost recovery, which I think is a fantastic option, EF cost recovery really gets a lot more involved with your business. They're going to run a full study on your qualifying events, the expenses that could be covered. They're going to calculate all the credits in conjunction with your PPP, even help you to coordinate your PPP forgiveness to maximize that benefit. And then they'll provide us the reports that we need in order for us to make those amendments or changes to your payroll. And then they'll give you a plan for moving forward with PPP round 2 and 2021. So I do know that what I like about EF cost recovery is at a minimum, they do bill $1,500, $1,500 for very small people that just want to have a study done so that they can claim the credit. But they charge a success-based percentage. So it's really determined on how much they get for your business. We are finding that almost every CPA firm that we've talked to is in support of this because they don't have the bandwidth or the expertise to consult on this particular program in the midst of tax season. And it's not at the fault of your CPA firm. They've been thrown 1,000 curveballs. They had to overnight become PPP experts and everything else. But they typically lean on experts like EF Cost Recovery to run these types of studies to make sure that you're not leaving any money on the table and that the work gets done. The other huge benefit of them being EF Cost Recovery is that they provide audit support. So in the event, it's actually right here, provide no cost audit defense in the event the claims identified by EF Cost Recovery are selected for examination by the IRS or any applicable state taxing authority. So if you and your CPA have to defend the credits that you took, EF Cost Recovery will at no cost provide you audit support, and CPAs need and love that. With that being said, I wanted to get into a couple of the questions that we had live. It looks like we're at about 30 questions that people want answered. I'm going to try to rip right through them, and if I don't get to yours, I apologize, and we can connect offline if you're a customer of Brabo's. If you're not, there's a really easy way that we can fix that. I'll get you a proposal. You guys sign up. We can help you out. So my company received a PPP loan and applied for forgiveness, but it's still pending. Can I apply for the ERC? Yes. My company applied for the loan, but not applied for forgiveness. Return the PPP with interest. Can you apply for the ERC? Yes. You just have to really study it. Somebody said, I'll prepare the ERC. Can you review the ERC report? How much do you charge fee for a review? We won't review it at Brabo. It's just too many moving parts, and it's not something that I can stand behind as far as like taking a dive, and I just don't have a billing format to support that. If you want somebody to prepare it for you, I recommend partnering with the EF Cost Recovery. Otherwise, work with your CPA and provide us a report that way. Next question, how do you differentiate between payroll used for PPP versus ERC so the payroll costs are not duplicated? Also, is this credit received either taxable income or a reduction of expenses? Is it a reduction of payroll taxes? Thank you in advance. It's actually a refundable tax credit, standard with any other types of tax credits like the work opportunity tax credit. So it comes to you in the form of a credit. The way that you would differentiate payroll used for PPP versus ERC is looking at your forgiveness. The payrolls that you use and applied for forgiveness are off limits. And also any payrolls where you got reimbursed for things like the Family First Coronavirus Act, you want to back those out before applying for this tax credit. So the best way to differentiate the two is to look at what you applied for forgiveness. How does PPP round 1 affect taking the credit in 2020? Specifically, what if you don't need all 24 weeks of payroll costs and other PPP for round 1 of forgiveness? Can you take the ERC during a portion of the covered period? Adam, so if they use a 24-week window, if they were able to use payrolls for 12 weeks and then use 40% of expenses in another manner to get forgiven, they can use the payrolls outside of the weeks that they were seeking forgiveness on, even though it would be included in that 24-week window, or no?
Yes.
Okay.
Yep.
Again, for your specific situation, I would recommend a consultation, Jeremy. All right, answer live. If I applied for the credit, if I used some of my EIDL loan for payroll. So one thing I want to talk about is the concept. A lot of people put money in different silos. They put it in all these different bank accounts, right? And they're like, well, this one is PPP and this one is ERC, and I'm going to do 75% payroll, 25%. The rules have changed 1,000 times, right? So what you can do now, in my opinion, is maintain 3 separate spreadsheets and look at it after the fact and say, this is what I used to pay for EIDL with. This is what I used for PPP. This is what I'm using for the employee retention credit. I think as long as you can list manage the expenses, and as long as those funds that you're using for those expenses were available at the time that you incurred the expense, you'll be fine. Diligent bookkeeping is going to be a major key. But I would not be using the ERC on funds that you use the EIDL to cover payroll for, because I believe that would be looked at as a duplication of benefits. Will we be able to get a copy of your slides? If you're a customer of mine, yes. If not, we can fix that, and then yes. How can fully or partially shut down apply in 2021 if businesses is still up to be closed? Just a small example, I would argue that a 9:30 curfew at a restaurant that's normally open till 10, to me sounds like a partial government shutdown, because they're limiting your ability to be there, or reducing the number of people that you can have in your office. But it really depends. Like you really need to take a look at your situation and say, were we partially shut down? So I would say that you'd have to look at your state's guidelines to determine whether you were fully or partially shut down. If you're currently deferring payroll taxes on Form 941 due to cash flow, can you take the ERC? Yes, I believe you can. Adam, do you know that to be different?
No, that's correct. You can still take advantage of the ERC.
So if you are deferring taxes, because you could actually either request a refund or you could just take it at a later point in time. And maybe in place of deferring the taxes, maybe you could have them forgiven in place of. I think by having the ERC carried forward, instead of deferring taxes, you could be cashing in on the ERC. So I think that might even be a better alternative to what you're doing. Can we go back for 2019 941 form? I don't know what that means, so I'm going to move on because there was no pandemic in 2019.
Kevin, real quick, just on the EIDL situation, it's our understanding that the way the law reads anyhow, it's the only wages that cannot be duplicated, at least from the ERC side of things, is the PPP. Obviously, we are not EIDL experts, so I would defer on that. But.
So the only thing to consider there, again, like, and the same thing is true with the Massachusetts grant, just as an example. On the grant, you are agreeing to not use that money for a loss that is covered by other funds. So, like, for example, if you're claiming the ERC and then you're using the grant funds to pay for those payrolls, I think you'd be out of compliance with the grant, not the ERC. And I think the same thing is true with the EIDL. We actually, in the beginning, it was very murky on getting approval from the EIDL to work in conjunction with the PPP. That was difficult early on. Somebody's raising their hand. Please don't raise your hand. Just put your question in the Q&A section, and I will get to it. But I think you may have an issue on the EIDL. I also think it's a 1 in a million chance that you have an issue with that, but I just think that if you're trying to look at it from a practical standpoint, I would say it would be best to maintain separate lists. I personally would prefer to not have them crossing lines because there's so many different covered expenses that you can use the EIDL for, like supplies, some vendor costs. You can't use it to purchase heavy equipment, but maybe you're not fully out of the EIDL money either. Maybe you still have a balance and you need to continue to list manage that. I think it's easy enough to just maintain separate lists. I don't think that many people would have a problem if they were to use both, but I just think it would be a smart best practice just to consider isolating it if possible. Next question, we qualify for the quarter, we are down 20% or more, or we qualify for the year. So last year, if you were going to qualify on gross receipts, you had to have a reduction of 50% or more in a quarter in 2020 versus that same quarter in 2019. And then the qualifying event ends anytime that your receipts get over the 80% threshold. Is that right for 2022 or no, Adam?
So 2020.
So if they qualify on gross receipts of 50% and let's say second quarter, when does that end? Is it when they get over the 80%, even though they had to qualify with 50%?
Correct.
Okay.
So if you qualify in the second quarter, you automatically get the third quarter as well. We'd have to look at how the third quarter shook out to determine if you continue on in the fourth quarter, but that's how it works.
Yeah, so it basically, like, you qualify in a quarter, then you unqualify in the following quarter, and the credit ends on the first day of the quarter after that.
Yes.
Right?
Yep.
All right. I know it's complicated, and that's why you guys need people. You know, don't go it alone. CA Act 2021, is it for business in 2020 or 2021? I don't really understand your question, but the CA Act of 2021 is really targeting this year. The only thing that it does cover that will apply to 2020 is the fact that you are allowed to use both programs, PPP as well as ERC hand in hand. So I received a letter from the 7200 processor department saying timing was incorrect, but they suggested to refax it. Awesome. Good luck. In PPP2, to qualify, only one of the quarters has 25% or more sales down to get payroll for 2.5 months. Just trying to find out. PPP is a separate webinar, and you should keep up with our topics on this stuff, but you do have to show a 25% reduction. If you're seeking a loan under 150,000, you do not have to substantiate that loss when you seek the loan, but during forgiveness, you will have to substantiate it. I do know that there are people who are somewhat close, and you have to imagine smaller business owners maybe a little bit behind on their bookkeeping, given the circumstances. So if you're cash flow tight, talk to your CPA, but I would say getting a loan under 150 and knowing it might not be forgiven may help keep you going. We qualify for the ERC now because of the CARES Act. If we paid payroll in April, not from PPP funds before we received the funds, but May, June, and July were out of PPP funds, we still use part of Q2 and Q3 not paid out of PPP. Yes, you need to just outline what reports you're using to seek your forgiveness. Any funds that you were looking for forgiveness on are off limits. Any funds that you were not looking for forgiveness on, you could use. And again, always check with your tax preparer, tax advisor. I am not a replacement for that. My job is to give you a high-level overview. If your PPP coverage starts third quarter and you are also eligible for ERTC, can you utilize both? Again, I think I just answered that question, so I'm going to move on. How will you prove whether or not the business is fully or partially shut down? In the event of an audit, you will have ample opportunity to do so. You're able to take the credit right now, and if you never get audited, it won't ever be a problem. However, if you get audited, they're going to say, why did you take this tax credit when your revenue was up?
Yeah, and I'll tell you, I mean, as part of our normal business, Kevin, we are accustomed to dealing with the IRS and handling any challenges from the IRS. It's just part of our business. As much as we like or dislike it, it just comes with the territory of the work we do. And our defense team, quite frankly, I'd like to point out, is led by a man who spent years working for the IRS in appeals and audits and is now off on private practice and leads our team for us. So we stand behind all of our work. We're comfortable. We're not going to be pigs and go after something that we don't feel you're entitled to, and we will be able to defend it on your behalf.
Great point. I would not be doing this on your own, and if you do understand the risks you are accepting. All right. Adam, can you mute for a minute? If I receive a PPP loan in May 2020 and I use the 24-week loan period and I qualify for the ERC second quarter, how do I split the wages so they aren't double counted? You just have to look at what you're seeking the forgiveness on. And again, you are allowed to do up to a 60-40 split, meaning 60% of expenses could be payroll, 40% could be something else. So it's really recommended that when you do your forgiveness, don't get complacent and just say, oh, here's 100% of payroll for 24 weeks. You're leaving money on the table. Can we use the accrual method for determining the over 50% revenue drop? Melissa, I believe you just have to follow your GAAP principles, your principles that you do your accounting on. I think that if you use accrual, you can use accrual. And I think if you do cash, then you could do cash. But you have to be consistent on which method of accounting you use for your taxes.
Correct.
Adam, is that right?
Yeah, you got to look at the tax basis. So if you're a cash basis filer, that's how we need to look at things to determine the reduction in receipts. If you're an accrual basis filer, then that's how we'll look at it.
Okay. If an employee fluctuates from full to part-time from month to month, do they qualify for the ERC the month or months that they had over the 130 plus hours? Oh, that's a great question. And that's actually a client that I believe you may end up being working with, but.
Yeah, so Kev, it's, I don't want anyone out there thinking that only your full-time employees will qualify for this. All of your employees and all of the applicable expenses related to all of your employees will qualify for some portion of employee retention credit. The only time that full-time number comes into play is at the outset when we're determining the scope, okay? So if we're looking at, are you over 100 full-time employees or under? That's when that full-time employee calculation comes into play. But I don't want anyone thinking that, hey, only my full-timers I can get credit on. You can get credit on all of your employees.
All righty, so next set of questions. Let me go back to this. All right. Next question, will this work for self-employed sole props? I don't know the answer to that, Adam.
If you're paying yourself W-2 wages, yes. We cannot use any, Schedule C income or
so you'd have,
like that.
Yeah, you'd have to be an S corp. So a sole proprietorship would not qualify, as far as we understand. Can you use net income instead of revenue? Not that I know of, Adam. Is that allowed? Net income?
No.
Gross. The definition is gross receipts. All Rice, my man, the CPA, the man, the myth, the legend, has a question. Can an S corp shareholder get the credit on their own wages?
Well, I guess is the S corp shareholder paid? If the S corp shareholder is paid through the corporation,
yes.
Yes.
So the definition, what he's saying is on their own wages, meaning earned income as far as like W-2 wages. So if they're on that payroll, 100%. Yep. So if they have payroll wages, they would count. Distributions would be off limits.
Correct.
Okay. I applied for a forgiveness loan, PPP. Can I withdraw PPP forgiveness loan? I tried to do that personally, and the short answer is no. To give you guys all a small glimmer of hope, I do think that there is a small chance that they will allow people to reapply for forgiveness at a later point in time. But for those of you guys that got it done, I think that you want to make your decision based on where you stand today. All right. The qualifier for 2020 is a 50% loss in a quarter or government reduced work. Does the quarter you want to claim ERC on have to coincide with those same qualifying period? For instance, we met the qualifications for 1 to 3 quarters for 2020, but had PPP. As of September, our PPP was exhausted, so last quarter we could use the ERC wages. Yes, you could use the ERC wages, and I know that you're a restaurant owner in Massachusetts, so I would say that when your bar and restaurant used to be open till 1 in the morning and you had to close down at 9:30 p.m., I would say that that is a partial government shutdown. But again, I would work with the tax team that you guys have already hired. They're going to help you guys a ton, and I know you're going to love working with them. My corporation had a higher income in 2020, higher than 2019 due to the service we provide. The corporation doesn't qualify for the second round of PPP. Based on what has been said, this will not qualify us either. If you are my delivery friend in your booming business, I do not think that this will qualify for 2020. But I can certainly set up a call. You have a large enough business that I can put you in touch with Adam and he can take a quick look. I'm not sure whether you're taking advantage of some of the other tax credits that would be good, but you work very closely with us and I will get him in touch. Just 1 second. Okay, so I just told Gabby she'll get you an email. What documents or reports to send for the employee retention credit? You would have to update your 941 to make an amendment if you want to claim this credit. If you want for Brabo to do it and we are your payroll provider, then you would have to give us a list of employees and how much money per employee you want us to apply for on them based on which year and which quarter they had those wages. So we would need an Excel spreadsheet with a list of employees. And the maximum in 2020 that the wages that would qualify would be $10,000. So any number under $10,000 that they made for the whole year. And that's taking into account FFCRA wages being backing out all PPP wages. We just need a list of employees, amounts, and quarters that they were paid in. Is this credit to be claimed through payroll or income tax? Through payroll, through 941. It's a refundable credit where you can request a refund. It can also be realized in real time by reducing deposits, but it's done on the 941. We purchased a successful lodging business in 2019, and then we're shut down in March of 2020. Q2 2019, the business had 111,000 in revenue. Q2, we had 15,000 in revenue. All other quarters in 2020, we only saw a loss of about 10%. Can we use the Q2 2019, 2020 to determine eligibility, even though we didn't own the business? That's a very, very interesting question. So, Adam, this company did not purchase the shares. I'm imagining that they established a new entity. What's good is that the business was established before February 15th, which is a key date in 2020 in order to be eligible for any programs. But to show the gross receipts, well, you know what, though? I would say that for your lodging business, were you part of a partial government shutdown? That might be your qualifier. You might be looking to qualify here on gross receipts, but the partial government shutdown might be an easier avenue for you to go here. But to the gross receipts question, Adam, do you know anything about that for companies that were started late 2019 as opposed to already being established?
There is a rule in place that we can look at the immediately preceding quarter, I believe, is how that works.
Awesome. So they would probably use second quarter as your qualifier. Again, let us know if you need help with that lodging business for payroll, or if you want to work with Adam, I can make an introduction. We're eligible for the ERTC in 2020, Q4 based on the CARES Act 2020. We did not apply for this credit in Q4 941. We also ran payroll only in October. Can we do the ERC retroactively? Yes. This is an important question from Edmund Craig. Why isn't Adam's picture up? He's so cute. Dreamy. He's totally dreamy. We are eligible for the ERTC in 2020, Q4 based on the CARES Act 2020. We did not apply for this credit in Q4 941. Yes, you can do it retroactively. Same question. All right, guys. We're down to 84 people. Anybody that wants to leave, please feel free to go. I'm going to keep answering questions for up to 10 more minutes. Hopefully, I'll be done faster than that. But please, by all means, like we've given you a majority of the content here. If you've heard enough and you really just need help, please reply to service@Brabo Payroll with the subject line employee retention credit and say, I need help. And we will get you lined up with the right people in order to help you maximize this credit. Next question. Going back to the 24-week period, but only needing 12 weeks of payroll to get forgiveness on the PPP application, do you show the 24 weeks of payroll or only the 12 weeks on the application? Only the 12 weeks, as long as that's what you use for forgiveness. In PPP, we needed to use 60% on payroll and rent and other bills so we could have to count for 60% or 100. I don't understand your question. It's not worded well. Has Adam had any clients receive refunds yet from an amended Q4 2020 filing? I haven't seen anybody get their money back yet.
So on an amended filing, the answer is no. We have had clients that have successfully received refunds on timely filed 941s, and also in relation to 7200s that we submitted for clients to get advanced refunds. And then obviously, we can, as we engage people here in 2021, Kevin, and we're looking at 2021, we can be very creative in the ways that we help clients keep cash in their pocket, whether it's, doing a calculation for the first month of the year and telling the client, hey, you've earned X amount of credit so far here in the year. Let's work with your payroll company, is it Brabo or somebody else, to shut your withdrawals off, shut down the money that they're impounding from you real time, so you can keep that money, and then we'll reconcile it on your 941 at the end of the quarter. So there are ways to get your money quicker. Great.
Is it too late to use Form 7200 to claim credit for 2020? Well, the key here is the 7200 is an advance of credits that haven't been earned yet, unless I'm mistaken. Adam?
Correct. That's correct. It's an advance on credit that you anticipate earning.
So it wouldn't make sense to retroactively get an advance.
No. For 2020, it requires an amended 941.
I have a statement that I'm going to put up to you here. I thought family owners were excluded.
I'm not sure what that
I don't know
means.
that. Yeah, I didn't see that. If you're if you're using part of the wages from your PPP covered period for ERC, how does that affect the calculation? You can't. You can't. Short answer. I received PPP loan and applied for forgiveness PPP loan. Can I apply for ERC now? Yes, you can. Just don't apply for ERC on any wages that were covered under the PPP forgiveness. If we considered an essential business, construction, but had limitations, curfews, limited employees on job sites, can we use the partial shutdown rule if we didn't drop by 50% revenue? It was very close, 49%. I say yes. I say yes. Partial government shutdown.
Being an essential business does not disqualify you from taking advantage of the ERC. We've had many essential businesses, quote unquote, because by the end of it, most governors, I think almost everybody was deemed essential, which was kind of crazy. But you can still be an essential business and qualify as being full or partially shut down. If you're a manufacturer and you're deemed essential, but you're only able to, because of square footage, have half your staff in, and you're shutting down 3 production lines, you're partially shut down.
Agreed. Just want to reconfirm, do we need to compare Q1 of 2021 reduction of 20% compared to 2020 or to 2019? Yep, so your 20% reduction needs to be 20% less than 2019. How does round 2 PPP affect the 2021 credit? You made it seem that it's best to push off receiving round 2 as late in 2021 as possible. Can you clarify why you are saying this? Once your covered period or alternate covered period begins, you will not be able to claim those funds. The employee retention credit ends at the end of second quarter. So as you can imagine, if you're getting the funds now, heading into the middle of February or something, that money is going to carry you through the end of the quarter. So you really just want to strategically think about it. The problem is for CEOs and CFOs that are making these decisions, they have a risk factor to them. If you push it out too far and one of those programs run out of money, then you're not going to get a PPP. Okay. So, it's kind of a game of chicken here. We don't want to run out of money on the PPP, but you want to try to take it when it's possible, and understanding what the alternate covered period is extremely important. And I recommend highly that you work with a team of experts to make sure you are not leaving money on the table. We have 3 questions left. How do we contact Adam for a consultation? What's his email address? Jody, if you email service@Brabo Payroll, we will get you in contact with him and we'll get that out. If you go by the rules, family employees need to be excluded. Okay, Charles Wolf, so this is somebody different.
I don't understand what he's asking or stating.
Yeah, that's a different person. So, none of us have heard that. I'm not sure where you're getting that information. If you do have that, Charles, if you could send that in as an email to us just to make sure. And then some people are actually putting their email addresses in here. I will be sending a follow-up email to everybody that was in attendance today, kind of talking about next steps. And if you have any interest in partnering with Adam, we will get him in touch with you. And then last thing, can I apply for loan forgiveness on the PPP as well as ERC? Yes, you can. I appreciate all of you coming. Okay, hold on. So here's something that just came in. Amidst guidance surrounding the CARES Act and other COVID-19 legislation, it's important to note additional limitations on the qualified wages used for calculating the ERC. One of these is the exclusion of wages paid to related individuals as defined in Section 51I1 of the IRS Code. Family question. Wages of individuals excluded from qualified wages would be those with the following relationship to the employer, if the employer is child. So she's giving, the full list. We can take a closer look on that.
Yes.
Adam, I will screenshot this for you right now just to double check. And let's see. Give me 1 second, guys. Okay. Got several other email addresses coming in. What email do we use to send you info? It will be service@brabopayroll.com. Charles, it looks like she just covered it. I think that she gave us a specific place to look. I appreciate you giving us that there. Melissa, are we going to hit any hiccups if there is greater than a 50% drop in revenue for a specific 2020 quarter, but total revenue is higher? Now, it's a quarter by quarter decision. And I'm just getting a lot of repetitive questions. So is the Form 7200 available for 2021 yet?
I believe so.
Okay. Again, if I apply for both PPP forgiveness and the ERC, is it fair? This is double deduction effect. You cannot use forgiven payroll periods that you had forgiven on the PPP. You cannot claim those wages on ERC. I don't know how many other ways I could say the same thing, but like that can't happen out of compliance. All right. All right, guys, I hope you found this helpful. Long and short of it is don't leave money on the table. Make sure that you're running a study on your business. Make sure that you are applying for this credit. It can be a huge amount of money. It can certainly help you to maximize COVID protection for this year. I hope you guys found this informative. If you're not a customer of Brabo yet, you really should be. If you haven't gotten lined up with the F cost recovery, send us an email and we'll get you in touch. Thank you all for coming.